Alright, good day people, it's Maritime Forex Academy, and today this is another introduction to Forex. So today we're going to be talking about fundamental analysis, what pips means in the Forex market, spreads and brokers. Okay, alright, pips just basically means how do I put it now? Pips in the market. If you say your a particular pair has moved 30 pips upwards, it just means that let's just let's make this more simple. The 1 minute time frame per movement in the 1 minute or lesser time frames is called a pip movement. 1 pip, 2 pip per movement in the not per minute, per movement. If you observe a candle movement there, because we have 30 seconds chart, that's the lowest time frame we have. So we have that is a pip movement. Then we have that is basically what it means. Pips, the minutes per movement, 30 seconds per movement in the chart. But basically, let's just cut to the chase, and the rest you won't really be focusing on that. All right. That aside, but for introduction's sake, now spread is just basically, it depends on the broker. It depends on how the broker you are using, be it HotFX, Derive. There are many brokers out there. Forex, Funded Next, Forex 8 Capital, and the rest. It depends on how spread. It just basically depends on the broker, how much is willing to exchange currency, exchange pairs when you are trading them. Some spreads can go as low as 0, some can go as high as 50. Depends on how depends on the brokers. But we, first, that we look for brokers with lower spreads, okay, with spreads that are very low. Those are the ones that will favor us, because low spread means as we enter a market, if enters we enter a market, it will either can't be in profit or loss, depending on how good our entry is. Okay, if a spread is too high, you can be in profit. You can see that you are already in profit, but yet, like, it's on the chart, or when you're looking at it basically on the chart like this, it may be in profit, but when you look at your figures, is still showing red because of the spread is too high. Because the spread is too high, that's what we always look for brokers with lower spread. Now, brokers in the forex market just means brokers in the forex market just means people that give you access to trade the financial market. Like Derive is a broker, as I explained. They give you, as I explained just previously, Derive is a broker. HotFX is a broker. FXMBoo. There are many brokers out there. These are just companies that give you access. You register with them, like OctaFX. They are brokers. You register with them, and they give you access to the financial markets to trade whatever you want. Be it crypto, be it what's the word for it? Currency pair, be it stocks, be it volatility indices. They are just brokers. They are brokers that give you access to trade the market. That's what brokers generally mean. Now let's go to fundamental analysis. So we have technical analysis, whereby we draw our chart, we draw our trend line, look for support and resistance zone, look for flag patterns, look for all the nitty-gritties, or the order block, retracement, liquidity. Those are what technical analysis. But fundamental analysis is just basically on news. All right, you trade news. But personally, as a trader, I don't do that. I don't do that. When it's a news day, I stay out of the market. But for introduction's sake, I will just tell you what it means. Fundamentals. There are some apps. My forex story or whatever is an app that gives you the latest news that you can use to know whether the market will go up or down. But the thing about news market is that it's always, news trading for me is always tricky. I maybe have not gotten to understand it yet, but people out there trade it. Okay, fundamental analysis is just basically what the news will tell you. What you're trading, you are basically trading off what the news is going to tell you. So if the news says there's going to be a positive push in the euro market. You're looking for a buy. If the news says there's going to be a negative push, whatever, if the president of United States says that the US dollar is going to have a massive gain, then there will be a massive gain in all US pairs. So you'll be looking for buys. So basically that's what fundamental analysis is. People out there trade it and make a lot of money, but for me personally as a trader, I personally avoid those. Okay, yeah. So basically that is all. Pips, as I said earlier, pips is just it's just the basic movement in the per second. If there's a 10 seconds chart, it's per second. Sorry for that. Is it? If there's a 10 second chart, it's per second movement. A peep in the a peep in the market. It depends on your lot size. If you use a 0.01, that's the lowest lot size in the currency pair. A peep will give you 0.01 cents. Give you a cent, give you 2 cents, give you 3. It depends on that as you are moving a pip up. 10 pips will give you $1. 20 pips will give you $2 if you're using the lowest lot size. When you get to 100 pips with the lowest lot size, you get $10. So it depends on the lot size you are using. All right, you can calculate your pip movement. Okay, spread, as I said, it depends on the broker. How will I put it now? Is the amount which a broker is willing to sell or allow you to what? Okay, here, yes, exactly. It's the rate at which the broker is selling or buying. Yeah, the broker you choose to trade with is the spread, is the rate. Yes, it's his own rate. It's the broker's rate at which he wants to sell or buy a pair. All right, it's currently that easy. I think that will be off to the introduction. And I said fundamental analysis is for news traders. Okay, fundamentals, you wait for news to tell you what to do and you act on it ASAP. Okay, all right, that will be all. Thank you again. I know I didn't really delve into it because it's just, these are things this video is just, honestly, it's for formality's sake, because once we delve into more better things, you understand why I say it's for formality's sake. Aside that, do have a nice time. All right, I'll be out.